All right, hi everybody, welcome and thank you for joining us today. My name is Tammy and I am HSMAI certified trainer, I think I still got that wrong, and founder director of Revenue. I would like to welcome you to HSMAI ROC at Home Live. Before I introduce our speaker today, I'm just going to go over some housekeeping rules. During this session, only panelists have microphones activated, so if you have any questions, please put them in the Q&A button. Remember, all of today's sessions will be recorded and will be available for you to view on the 19th of June. Our moderator for this session is Fani Swanepoel, Senior Vice President at Marina Bay Sands and Chair HSMAI Revenue Advisory Board Asia Pacific. Now over to Dr. Weber, Director Air Intelligence, to talk about the state of the Asia Pacific economy. Over to you, Dr. Weber.
Thank you very much, and thank you everyone for coming to listen to me today. I'll be looking at the Asia Pacific economic and aviation status and prospects, as you can see there on that introductory slide. The particular agenda or the things that I'll be taking you through, we'll start off by looking at what's happening in aviation at the moment and the current state of the world. Quite clearly, only one word really can describe it, which is horrible. So we'll look at some key aviation statistics. We'll then look at economic growth in Asia, and similar to aviation, we're at a point in time of the world in which modern history will not likely see economic growth rates the way that we're seeing them in Asia at the moment. We'll then look at the length of time that I think will be required before we will see the economies, aviation and tourism and hospitality to return to pre-COVID-19 levels. And I noticed I've got a typo there on that slide. I've referred to it as COVID-29. That's not a new strain of COVID-19 or the coronavirus, so don't be worried about that. So then we've got, we'll be looking at the lessons learned from the SARS virus. So there are some lessons to be learned in terms of the magnitude and the timing of recovery from SARS, and in particular in aviation, how some of the airlines responded to SARS relative to the way we're seeing them respond to the coronavirus. Then we'll have a brief look at whether I believe there will be a permanent or short-lived impact on business purpose traffic. And then I've also been asked to give my personal views on personal protection in hotels. I suspect that I won't get to that last point, but the slides, which you should be able to take home with you, that has quite a bit of detail around what I believe personal protection in hotels will look like and should look like. So that may be enough. And I'm happy to take emails from you if you have any questions in relation to these slides at a later point in time. But let's get cracking, shall we? So this slide 4 is the title slide for the aviation backdrop. And what I thought I'd take you through is just what we're seeing at the moment in terms of aviation, because it's such an important driver of the hospitality business. And I group the aviation impact into two types of impacts. One's the direct immediate impact, and the other is the indirect immediate impact, or like an indirect effect. The direct effect says that basically countries and states within countries have closed their borders, and that's essentially stopped aviation in its tracks. So the only type of traffic that we're seeing in the case of airlines at the moment is essential traffic. We've got some residents that are trapped overseas and they're being flown back home. And we're also seeing relatively normal levels of air freight traffic as well. That's about the only traffic we're seeing. As we'll see in the slides coming up shortly, it's, aside from that small amount of traffic, it's really stopped dead. And that's largely because the borders have closed, both state and national borders. But probably even worse than that effect, unfortunately, is the effect that we're likely to see through the economy on aviation, tourism, and hospitality. And that's just because we're going to see a global economy and a large number of economies within that global economy that will be at their weakest point in modern history. And that's largely because of the three forces I've got written here down towards the bottom of slide 5. One is an income constraint, which basically says that people have lost their jobs, they've lost their labour hours worked, and as a result of that, there's a significant loss in household income, and so they just won't be able to spend on the discretionary items that they could before. We've got households that will be, as a result of their income constraints, there will be liquidity constraints, so they don't have the cash on hand to finance any of their discretionary spending, which includes air travel and hospitality. And probably most important is confidence. People will be worried about flying on aircraft. People will be worried about staying in hotels. People will be worried about their jobs. So they're the three forces that will be shaping what we see in terms of the economic impact on aviation, tourism, and hospitality over the next 12 months and possibly beyond. But let's just have a look at some of these impacts on airlines that we're seeing as a result of COVID-19. So you can clearly see in the month of April 2020, and this is an example of Singapore Airlines available seat kilometres. That word capacity in that vertical axis title should be kilometres. So what is an available seat kilometre? It's you take an airline seat and you fly at a certain distance. That's a seat kilometre. And so it's basically a measure of airline passenger capacity. So what we can see in this graph is just how devastating the impact has been on airline capacity, particularly from April 2020 onwards. The effects been coming for, it really started in February. It got kind of worse in March. And then we're seeing the most devastating impact in April, and we'll see it again in May. The May data hasn't come out yet, but when it does come out, it'll be obviously awful. So you can see that basically airline capacity has dropped to zero, except for a little bit of flying, which I mentioned before. More importantly, though, you can look at the impact of COVID-19 relative to what we saw for SARS and relative to what we saw in the case of the global financial crisis. And if this went back a little bit further, you'd also compare it to the Asian financial crisis. And really, there's no comparison. We haven't seen anything like this in our lifetime. We're not likely to see it in our lifetime going forward. You could say the same thing for Cathay Pacific. Like the graph looks almost like a mirror image of what we saw for Singapore Airlines. Again, incredibly devastating impact in April. And then you're likely to see this again happening in May as well. But you can see that compared to the global financial crisis, which is awful for airlines, compared to the global financial crisis, that's just a drop in the ocean relative to what we're seeing here with COVID-19. Thai Airways, so I'm taking you through some of the really key airlines throughout the Asia Pacific. Thai Airlines, again, mirror image of what we're seeing for Cathay in Singapore. I'm going to take you now through a couple of the Chinese carriers, and they're a little bit different because China went into the coronavirus pandemic earlier than a number of other countries. Obviously, it's by virtue of the fact that it's believed to be started in Wuhan, China. What we can see in the case of the Chinese carrier numbers is that we've seen a really deep impact in February and then an improvement in March before it's deteriorated again in April. And if we look at China Southern, the absolute trough is actually in February. And so this tells us that at least in the case of the Chinese carriers, they appear to be going through a turning point. And I suspect that you'll see the same sort of numbers for the other Chinese carriers as well. So what we're likely to see for other carriers around the world are just these small green shoots of recovery starting to happen, particularly in June, July, August, September. So that's the the unfortunate news about aviation and the bad news just keeps on coming when looking at the economy. So if we look at economic growth in the Asia Pacific, the way that I've decided to present on this today is by looking at a group that's defined by the IMF as emerging and developing Asia. And that consists of around 33 different countries. And I've presented the flags of 15 of the major countries within that grouping. If you can tell me the countries for all of those flags, then you're doing much better than me. There's a couple of flags in there which, I had no idea about. But what we're going to take you through now is the expectations around economic growth in emerging and developing Asia. And this group of Asian economies will include the big ones like China and India, Malaysia, Indonesia, Thailand. And so what is the dominant expectation? The dominant expectation is that for calendar 2020, so up here, we're looking at growth of 1% when we normally have growth of 7%. So we're expecting economic growth to be around 6 percentage point lower than it is normally. And just trying to extract the major statistician out of you, which I know you are, that refers to a 2.5 standard deviation event. So that means that economic growth in 2020 is expected to be, 2 standard deviations below the average that we typically see. And anything that's like 1 standard deviation is a horrible event. So what we're seeing there and what we're expecting for 2020 is 2.5 times horrible. Right, and just to fix your ideas around this, and hopefully on this call we'll have a lot of people who've lived through the GFC and many that lived through the Asian financial crisis. This event is likely to be 5-6 percentage points worse than the GFC and around 2 percentage points worse than the Asian financial crisis. So unfortunately, it doesn't make for good reading in 2020, but and it's always good to have light at the end of the tunnel, obviously, but we're expecting growth to be really strong in 2021. But that's really not surprising because every time we've had a really severe period of economic weakness, and we had one in the early 80s, we had the AFC, the Asian financial crisis in late 90s, and then we had the GFC in and around 2009. Each time we've had some of these crises, we've had a major bounce back. So not surprising that we're forecasting a situation in which 2021 growth will be much better. So I like presenting on graphs like this on slide 14 because what it tells you is how the forecasts have been revised down in response to seeing what's happening with a major shock. So what the orange line is the IMF's forecast of growth in emerging and developing Asia from the perspective of 2019 October. So obviously before the coronavirus. What we've seen from the perspective of April 2020 is growth of 1%. So they're essentially forecasting a 5 percentage point drop in economic growth. So remember, normally growth is 7% in emerging and developing Asia. They're forecasting a massive 5 percentage point drop just as a result of the coronavirus. And we see the same sort of revisions to growth happening in the case of Hong Kong, where we're seeing 6 percentage point revision downward in economic growth, seeing a 4.5% revision downward in economic growth for Singapore. For Australia and New Zealand, the news is even worse with 9% drop, and for New Zealand, it's a 10% drop. Now, the reason it is worse for, sorry to go through those slides quickly, but Hong Kong is bad and is worse than Singapore, but Australia and New Zealand are even worse. And that's largely because Hong Kong and Australia's going in position. And by that, I mean what the state of the economy was like just prior to the COVID-19 and the pandemic. Their economies were significantly weakened by different things. So Hong Kong was affected by the protests, and Australia was affected by some pretty major bushfires that were burning throughout the country in November, December, and early January. So the reason, or at least part reason, why we're seeing pretty major revisions, downward revisions to growth as a result of the coronavirus, was that their lead-in position wasn't great. Secondly, New Zealand and Australia had some of the most significant and severe restrictions and lockdowns across the global economy, which is not great for growth as well. Right, so let's move on to slide 19. And this section looks at what I think about the timing of return to pre-COVID-19 levels. So how long will it take until we see some sense of normality in hospitality, tourism, and aviation? Before I get to that, what I thought I'd take you through is how I see the recovery happening in Australia and probably New Zealand and maybe other parts of Asia. But this focal point is on Australia, and hopefully it translates to other economies in Asia. But what I've seen is that we're seeing in Australia that the self-drive day trip has really come back quite well, bounced back well. That's day trips where you go for a drive in the car with the family and you're going somewhere for less than like 100 kilometers. That really started coming back in and around the end of May when some of these restrictions were being lessened in Australia. Then I see the market for short-term, short trip, self-drive overnight stays where you might go on a trip that's more than 100 kilometers away, but you stay overnight somewhere. And we saw that coming back early in June in Australia. And what we're on the brink of seeing is regional intra-state, so within state overnight stays where the transport mode is by air. And then later on at just, somewhere in July, because we're going to see some of our state borders being some of the restrictions associated with the state borders being relaxed, we will start to see air travel over long sectors and ultimately air travel over much longer sectors. Now, you'll notice on this slide I've left off international travel, and that's because that won't be back in any material way until sometime in calendar 2021. We just heard one of our ministers in Australia come out just a couple of hours ago saying that our international borders won't be open until 2021. But there will be some countries where inbound tourism is incredibly important for those economies that will let down their borders sooner and more likely, at least initially, let down their borders to COVID-safe countries. So we've seen Greece come out recently, and we've seen Bali come out saying that they're really ready to relax their borders, which really reflects on the fact that those two economies are incredibly reliant on inbound tourism. But moving to slide 21, when I'm thinking about how long it's going to take before we recover or we return to pre-COVID-19 levels, I think of the supply side and the demand side. So on the supply side, it will clearly depend on when border restrictions will be lifted. And as I mentioned before, state borders are coming down as we speak. And then national borders will come later, likely to be next year. But it will also depend on unit costs. And so I know in the airline business, ground handling costs, which involves cleaning the aircraft, cleaning the inside of the aircraft, they're unambiguously going to go up. And hospitality costs for the same reason, I suspect, will go up as well. So with unit cost increases, obviously you need to recover those with higher prices. So that's going to deter the extent to which demand is going to rebound in response to some of these restrictions being lifted. But most of the uncertainty is really on the demand side of the recovery, and that will depend on the extent to which the economy recovers. So let's talk about that a little bit. So we see on slide 22, let's just take you through the key parts of slide 22. The three most important drivers of aviation, tourism, and hospitality from a macro perspective are income, wealth, and confidence. Now, most of you out there are probably thinking, well, let's focus on what's happening to GDP in terms of what's driving the demand, the macro demand for hospitality at the market level. But the other really important driver is wealth, and another important driver is confidence. And the reason we need to look at both income and wealth is because they could be doing very different things. And we also know that, at least in my neck of the woods, around a third of consumers consume from their wealth because they're retired. Around a third of consumers consume from their wealth and their income, and a third of consumers consume from just their income. So if you're only looking at GDP and you're only looking at income, then you're leaving out a significant driver of the decisions to travel and the decisions to stay in accommodation. But confidence is important as well, because you could have strong income and wealth performances, but if you're not confident about your income and wealth, you're not confident about your job, then you're not going to travel. So it's really important that we look at all three combined. So if we look at all of those three issues, I think they can be summarized in terms of 5 key questions. How long was the economy in lockdown? So the longer the economy is in lockdown, the deeper will be these income, wealth, and confidence effects. How long are the borders closed, and how important is inbound tourism? So clearly, the longer the borders are closed and the more important is inbound tourism, the longer it will take for economies to recover from the pandemic. How have equity markets been affected? Now, the reason I single out equity markets is for premium hospitality and for premium air travel, because what I know based on my 7 years working at Qantas as a chief economist was that there's like a 95% correlation over a 20-year period between international premium cabin yields and international premium cabin seat factors, which translates into the average room rate and the occupancy rate in the case of hospitality. Premium room rates and premium occupancy rates will be heavily affected by the equities market or share markets. And that's largely because equity markets, one, are a leading indicator of the economy, and two, they provide a significant leading indicator of confidence in the economy as well. Now, the interesting thing about these equity markets is that the equity markets or share price movements will be very, very different for different economies. So, for example, we know from peak to trough that equities fell by 30% in Australia, but they only fell by 15% in New Zealand. So these sort of equity market effects will be something that you'll need to look at on a country by country basis, but they're important. And then the other factor that will affect the timing of the return to pre-COVID-19 levels is just how far the virus spread. And that clearly has differed across different economies, both in the Asia Pacific and the global economy. But if we look at just on the basis of GDP alone, I think the economies that will return to pre-COVID-19 levels relatively soon, and I expect towards the end of 2021 more than the start of 2021, will be the really big countries in Asia like China and India and Indonesia. The countries that are expected to take a little longer are the sort of more developed parts of the Asia Pacific, Australia, Hong Kong, New Zealand, Singapore, and Thailand. So I'd expect GDP to return to those levels, will return to pre-COVID-19 levels over the next year and a half to 2.5 years. And therefore, you're looking at underlying demand for hospitality and aviation and tourism to do the same. Right, let's look at some very cool lessons to be learned from the impact of the SARS virus. Right, so this is just a simple schematic diagram of how I've observed the impact of the SARS virus happening how the impact has affected tourism and aviation back in 2003. So that's just a general depiction of the movement we're likely to expect, or we saw in the case of SARS. So it started that it had a negative impact, an initial negative impact, which I call the shoulder falling impact. Then it has a peak negative impact or a trough. Then it starts its recovery phase. Then we see a return to pre-SARS shock levels. And then in many, many cases, we see that demand actually rebounds more strongly than it did pre-shock, or in this case, SARS levels. So that's just a general depiction of the time movements or the sequence of events in response to SARS. Let me take you through a few examples of what actually happened. And we start off by looking what happened at Changi Airport. And I picked Changi Airport because it's a huge airport for hub traffic through Asia. And so what we saw at Changi Airport in 2003, remember SARS started in early 2003, and really the recovery began in around July, August 2003. So the impact on Changi Airport passenger numbers as a result of SARS was about 20.2%. So the orange line here is what actually happened to Singapore Airport passenger throughput. The blue line is what would have happened without SARS. So we're looking at a 20% reduction in passenger throughput at the airport. What we're seeing now in the case of Singapore Airport is a far deeper impact, far, far deeper. And so this is monthly data for Changi Airport in more recent times. And so it's capturing what we're seeing as the impact of the coronavirus on a monthly basis at that airport. So you can see it's essentially driven all traffic down to zero. And that's because the airlines have shut down capacity and the borders have been closed. So what we're seeing here in the impact of SARS, impact of the coronavirus, is essentially 5 times what we're seeing as the impact of SARS. Then we're not able to see, there's still more to come in terms of the negative impact, still a lot more to come. So May and June will be very, very weak. But by July, we'll start seeing, if we are to learn from SARS, we'll start seeing this curve pop up again in and around July, August, September, and then hopefully be up around here. I'm not sure if you can see that, but if it'll be, I suspect a return to pre-SARS levels 1.5 to 2 years down the track. Let's look at some of our learnings around SARS by looking at it at a monthly frequency. By looking at it at a monthly frequency, you can see the timing of the impact of SARS. And so what we saw is that the impact started in around January 2003 with a very mild impact. Then you had the shoulder falling impact. Then you had the peak impact after 5 months. And then we saw the recovery, and the recovery took around 7 months. So that's passenger numbers with Singapore Airlines. Now, if we look at Singapore Airlines yields, and this is really important and it's important for hospitality, because not only do you see very, very weak demand manifest itself in visitor nights, but you also see it manifested in weaker room rates. Well, at least we do. This is what we see with airlines. We see both weaker passengers and weaker yields, because what airlines will do is they'll see their loads falling, they'll see the cabins empty, and they'll try and stimulate demand by reducing the price. And we saw exactly that during the SARS virus for Singapore Airlines. But interestingly enough, what we saw post the SARS virus is a very strong recovery in yields as well. So what that tells you is that in May and June, April, May and June, you'll see incredible weakness in your business. But when it starts to recover, the recover will be exceptionally strong. And as an example of that, over the past couple of weeks, we've seen the Australian ski fields open up for bookings, and there was such strong demand for bookings to go skiing in the Australian, Victorian and New South Wales Alps that the booking systems just couldn't manage it. So when demand fights back, as long as the border restrictions are not in place, demand will respond very, very strongly, because what we do know in my neck of the woods, and I suspect throughout Asia, is that we hate being tied down. We hate it. It kills us. And so when the restrictions are taken away, hospitality and tourism and aviation will respond very, very quickly. And that's evidencing this, right? This is one of the lessons we've learned from SARS. One other really incredible lesson that we've learned from SARS is that airlines were not quick enough to respond in terms of the timing of how they pulled capacity out of the market and the depth of capacity they should have pulled from the market. I know that in the hospitality industry, it's very hard to take capacity out of the market, but airlines can. And I think it's fair to say in response to SARS, they weren't very good at it. But in response to COVID-19, they've been forced to basically reduce capacity to zero. So they've been forced into a different response. And I'm not going to go on with, this is another example of Hong Kong. It's a very similar situation. So passenger numbers fell by 30% during SARS, and we're seeing like 100% reduction in passenger numbers through the airport as a result of the pandemic. And you can see how weak the numbers were leading in the pandemic in the case of Hong Kong as a result of the protests that were happening through the streets and in the airport itself. A couple of good lessons to be learned from SARS for the Chinese airlines. So you can see here that, and I think one of the things that you should take away from it is this part here. You can see how the blue line has recovered to well above what it was pre-SARS. So that tells you that there's every possibility that demand will be stronger in the post-COVID-19 world. And because that's what we saw during SARS. And that's because there's hardly any traveling here. So they need to replace their traveling here with their traveling in the world where it's safer to travel. And we will see that. We're seeing it also in the case of, well, this is China Southern's numbers in the case of what we're seeing as a result of the coronavirus. So importantly, we're seeing the green shoots of recovery coming out of Chinese numbers. Similar thing for China Eastern. Importantly, it was 4 months before China Eastern saw that its passenger demand actually grew above those that were before the SARS virus. And then China Eastern passenger numbers during Corona. So again, we've seen the peak impact in China. Now it's time for recovery. In the case of other airlines, the trough is not in February. It's likely to be April, May, and June. But it does tell us that life is not going to be horrible forever, and aviation and tourism and hospitality will bounce back. So how long have I got? I've got another 15 minutes. Okay, the impact on business traffic. So what we've seen during the pandemic is an enormous reliance on video conferencing, and I myself think I've had around 50 to 100 Zoom meetings and presentations like this, and it's been ridiculously successful in my opinion. Other people might have different experiences, and I'm sure they do, but I think as a general remark, I think it's been very, very successful. So the question that I've been asked is, will they have a permanent effect on business travel? So to answer that question, you have to look at what the business case is for business travel and what the business case is for video conferencing, because essentially allowing an employee to go on a business trip is essentially a return on investment decision. And so the employer says, well, we're going to spend on air transport, accommodation, and land transport. So that's our investment. What's going to be our return on investment? So obviously the costs associated with face-to-face business travel will be significantly more than video conferencing. but will they achieve the same revenue rate of return to that investment? So on slide 40, I take you through what that will depend on. And it will depend heavily on the type of business travel, whether it's to lobby a government, which I've did 1,000,000 times with Qantas, whether it's to meet a client, whether it's to meet a supplier, or whether it's to meet staff. And the return on investments in meeting these different clients might be a lower rate of tax, or a regulation that's removed, or government assistance. It'll be a new account with a new client, or expanding an existing account. It might be just a better way of running your company, and productivity improvements. So really, the answer to whether business travel will be permanently affected will just depend on the accommodation establishment and the airline. It'll depend on their demographic, and it'll depend why business travelers are coming and staying in your accommodation. But on the basis of what I've seen, I don't think anything can replace permanently face-to-face travel. And one of the reasons for that is just because it's not the same. It's not the same quality. You can't see, you can't see body language over video conferencing. My wife's just walked behind me in this video, and you've got stuff like that, which I don't think people really mind, but there's little things and complexities in video conferencing that you just don't have with face-to-face. The other thing I think is important is that whenever I go traveling overseas, and I do it a lot, it's always a dual purpose. You always do a little bit of leisure with a little bit of business. And so you can't do the little bit of leisure if you're not doing face-to-face. So I don't think that can be replaced. If I was having a guess at what the impact will be, I think there will be a fairly permanent impact on maybe 10 to 15% of business travel, but the rest of it will return back to normal. And I remember back when I was at Qantas, back in like 2005, people in Treasury were really, and finance were really worried about video conferencing. Like back in the day, like the mid 2000s, 2005, and they were worried about the negative impact on the business. And Qantas was really worried about it because their passenger demographic is very high on business purpose traffic. And so they were worried about it, but as it turned out, they had nothing to worry about. So I think we're going to see there'll be a minor impact, but it won't be as significant as some are saying. So finally, and I'll just I'm not sure if the question time includes all of my 45 minutes or not. Is that?
Yes, it does. So we've got 2 questions if you want to have a look at them now, or we can finish off your slides.
What I might do is just finish off one more slide.
Yep.
Then we'll go to questions, because this one slide summarizes all of it.
Perfect. Go for it.
But this is my personal view, and I was asked to provide a personal view. I don't think there's any evidence supporting it, but what I would do if I was in accommodation or advising accommodation is understand your visitor demographic. So that clearly includes, that will look at the at-risk age group. So clearly, if you're a accommodation establishment and most of your visitors are age 65 and over, then they're an at-risk group. And so you need to put in place some reasonably extensive measures. There are also at-risk groups, and I'm an at-risk group. I've got a very poor immune system at the moment, and there are tons of us out there. There are people who those with diabetes, those who've been through chemotherapy, others that have problems with their immune system as well. And there are hundreds of thousands of people in that situation. So they will also be concerned about the personal protection in hotels, and they will require extensive measures. And there are also those who are not necessarily directly at risk, but they have people within their household who are at risk, or people who they're closely related to, and they will need strong measures. And then there will be some establishments that have a visitor demographic that's very, very young, leisure focused. That's likely to only require moderate measures. So the first thing what I would do is just see if I'm incredibly exposed to at-risk groups or those groups with suppressed immune systems, and also those groups that are, at risk of passing on a virus to those most at risk. So what I would do is, and this is similar to something that I was involved in at Qantas, just look at every single touch point for the visitor. So they walk into your hotel. So what have you got sitting outside the doors of your hotel or accommodation establishment that will pose a risk? What is the risk from walking in the doors through into check-in? What is the risk getting to your room? What is the risk? Oops, this one here. What is the risk associated with getting into your room? Once you're in the room, what are the risks there? It's the bedding, it's the remote control, it's the bathroom facilities, the air inside the room, the dining areas, and the other parts of the hotel. So just depending on how at risk you are, I think you've just got to look at every single touch point and deal with it, deal with the personal protection issues at each point. So as I mentioned, the rest of the presentation, I think it's like 5 or 6 or 7 slides, provide more detail about each aspect of these, but they're easily read in your own time. So I'm going to leave it there and open it up for discussion and questions.
Okay, Dr. Webber, we've got 2 questions. Do you have GDP figures for the Philippines and when you expect the Philippines to get back to 2019 values?
Yes, I don't have them obviously in this presentation, but I can get access to them. More than happy to provide that information to whoever asks. You can provide my email a bit later on. I suspect that Philippines will be, I'm not an expert on the Philippines, but they seem to me that they're probably more likely to be aligned with Thailand, like Thailand and Indonesia. They're likely to return. So if you go back to my slide, where are we? If we go back to way back in time with the slides for, just bear with me for one moment. Return, here we go, this one. So I think it's more likely to be in line with Thailand. Well, I said Thailand and Indonesia, but just depending on how severe the pandemic has been in Philippines relative to these destinations, these countries here, I suspect, end of 2021 and 2022 as a guess. But let me get back to you on that, and I'll provide some GDP figures for you as well.
Okay, Dr. Webber, do you have your contact details on a slide so the couple other questions we've just run out of time for, they can email through?
What do I have? I don't have them on this slide, but I can provide it to the organisers and they can get in contact with the organisers maybe, but I can, well, actually, if you go to this website and you go into contacts, you'll find my details there, but it's my name, tony.webber at airintelligence.com.au.
Perfect. All right. Well, we're going to have to wrap up now. We're out of time. So we just give you all a break before the next webinars start at 3 o'clock. Do you have the slide with what's coming up next?
Yes, I'll get that for you.
There we go.
This
So
one.
there we've got reimagining your market segments, a revenue focus, or auditing your room types with myself. So we look forward to seeing you on the next webinars. But until then, I will pass on all the questions to Dr. Webber and he can have a look at those, or as he said, drop him an email direct. Thank you so much for attending today. Bye.